Okay, Ron and myself are going to be doing a presentation here. We're kind of the financial people over here at Codabears. If you got a financial question, if we can't answer it, you're in trouble, or you're going to have to go somewhere else. I think that's the easiest way to say it. Ron's been doing this a little over, what, 15 years in Epicor?
Yeah, about that.
Okay, and I'm hitting 25. Why do I feel old? Today we're going to go over GL segments and account flexing. This has been around for many years, but we're finding a lot of people out in the community aren't using this feature. So of course we had to reference the SNL skit, and we're going to pump you up. But this is really what it is. It's taking your financials and taking it up a notch. Let me see if I can go ahead and hopefully that's full screen there for everyone. In Epicor 9 is where they had the birth of total flexing. It did exist in earlier versions where you could flex in the segment and the department, but that's all you had. If you use those options in your company configuration to have a 3-segment chart of accounts. When Epicor 9 came out, they said, hey, we'll give you a whole lot more chart of accounts. Or segments into your chart of accounts, and you can go ahead and build this. But how do I get the system to turn around and utilize that? Most customers we're finding are still using a maximum of 2 or 3 segments in their GL. And they're not really monitoring their financials. Well, I'll take it to Excel, I'll turn around and sort it later to try and figure out what I'm doing. The GL is comprised how you define your structure and then what's going to be mandatory segments and what's going to be optional. And Ron and I discussed this at great length. I think the natural account should be optional. What about you, Ron?
No, natural account should be mandatory.
Yeah, that's no fun. Got to make the owners guess when they look at the financial report. So the mandatory segments are going to be kind of your natural account, the division, which is going to be your revenue side. And Ron puts a little bit of a spin on that too. I know he turns around and plays with it a little further than that. And then your department, which can also impact your revenue side if you're using sales categories. You can also have your locations or your sites or plants be a part of the general ledger, as well as your warehouses within those plants. This is kind of crazy. How many people would you say, Ron, are using 5 segments in their GL or 8?
Not very many. Usually there's 2 or 3.
So this is something we really wanted to bring to everybody's attention. You can take this way beyond what you guys are doing. In a multi-site environment, your shipping site's going to receive the product group data, sales, costs, and variances. In a single site, your warehouse is used to designate that location. Location of the warehouse receives the product group data, the sales, the costs, and the variances. Breaking this out in your GL is taking it from what the basic system is going to do and now making your financials go the extra mile so that you don't have to do that post or the ad hoc reporting of analyzing your financials, which you can do in tools like Excel Connect, Excel. People are just using this. The department segment can also change on the revenue side, and you can have the sales category kind of pull in here if you want to break down where your revenue is coming from on a more granular basis. Department would be your earned or applied labor, captured at the department level instead of the site level. We'll see a lot of people are just doing the site level and not taking it down a step further. So let me see here. Okay. Ron, do you want to go over GL control maintenance?
So in the initial setup, this is for a single site. On the product group, we need to have a sales account and a cost of sales account, probably cost of sales, labor, and burden besides material. But in this example, we're just dealing with material. And we put in the 0 zeros for the other two segments to get a valid general ledger account that the system can then automatically change or flex the division segment or department segment. Next slide.
Okay.
So in this example, we're showing that we have on the left screen is our segment 01, and it's in this training database, it's for Rockford, and the right screen is for Evanston for 02. So there is opportunity for what you might call a poor man's multi-company, to where you might have different sites. If you set those up as warehouses within Epicor, now we can start to track based on that division our P&L impact. And if you want to push that a little further, then we could get a whole nother discussion about modifying some of the posting rules to get the division to be reflected on your balance sheet. That's a whole nother discussion. But this division gives us the capability to capture the revenue and cost of sales by that segment 01 or 02, segment number 01 or 02, changing dynamically as the transaction happens.
Awesome. And I like the way that you broke out the example here as a service van. So I can have a guy that's driving one truck and a guy that's driving another truck and still track this down. It's a mobile warehouse. So how does that all flex together?
So on the sales order line on the release tab is where we need to specify the shipping location. This is what's going to trigger the 00 from our GL control setup to change to 01 or 02 based on the shipping of that line.
Awesome. And I noticed that my highlights shifted. This is going to be on the warehouse in the from on the order entry screen, not the site. It looks like my highlights shifted up a line, but this is going to be based on the warehouse that's selected that you're fulfilling this order from. Simply putting this on the order is going to generate where this inventory is coming out of and where we're hitting.
So now when we process that shipping transaction and we look at our inventory WIP report, at the bottom we see that we have the 01 and the 02 coming out of inventory and going to cost of sales. So that's part of the poor man's multi-company, where we can use the division segment to identify different locations. In this example, they're service vans, but they could be physical sites, could be sites instead of a service van, depending on how you define that division segment.
Yep, or it could be just breaking down inventory in your warehouse.
Yes.
Now on a financial report, it would still roll up to the main chart, the 1205, correct?
Yep, we can have that roll up that way.
So on a financial report, you're still going to see it at the top level, but if you want the granularity, it's also available. Epicor's posting engine is going to run the transaction when you perform the transaction. It doesn't really care how many segments you're putting in there. It's still going to run and do all of the logic processing behind the scenes. So getting the granular information out of it, if you put it into the structure, you can get it out. If you don't put it in, you're going to be exporting transactions and reclassifying them in Excel to get those types of detailed reports. The system automatically does it for people. The invoice edit list, it's going to follow the exact same rules and same set here. So our accounts receivable is still going to hit, but our sales is going to be broken down by the service van as well. So Epicor is still doing all of the flexing just based on the GL control. We're just setting up the GL controls to make sure that all of this transaction takes place and is classified correctly. That was kind of doing more department or divisional flexing, but we also have department flexing.
So the department would be another segment, which would be traditionally either your second or your third segment. And in this slide here, we see the second line for applied labor having 0000 as the last two segments. And 2 lines down from that is applied overhead, again, 2 zeros. And that gives us a valid general ledger account that the system is going to change those segments as we go forward.
Now, one thing to note here, the 2500-00-00 account does exist in our chart of account structure. I don't think you can reference an account. I've never tried it, Ron, but I've never tried putting in an account number that doesn't exist and having this still flex through. I believe the account number has to exist in the chart of accounts.
Yes, it needs a valid general ledger account. That's why we use 0000 as a valid general ledger account, a placeholder in the GL control setup.
Yep, otherwise I think you're going to get those vertical pipes in between the numbers on your edit reports that everybody sometimes receives and wonders how they got there. But by putting the department in here, I'll go ahead and try and click on here. So you're heading over to like the different job departments out there on your main book and then setting up a department that you're going to flex that into.
So these next couple of slides showed the metal shop or deburring as a department 30, and then the next slide will show us department 40 for machine shop.
So each of the departments ends up getting its own segment, but they're still going to roll up to the top level when I look at it on a high level for financial reporting. So here you ran the WIP reconciliation report, and it turned around and flexed in the departments for us.
So now we start to see in the middle of the screen that account, that the first red line there shows applied labor metal. So that's the credit. Now, when I look at my department expenses, I can see that's the credit. A debit in that department 30 could be wages and related expenses, consumable supplies, maybe some depreciation. Now, when you start to capture the dollars divided by hours, now I can test that actual expense rate. I can give that information back to quoting with, here's a data point, please consider this when you're quoting future jobs. So you have some idea of where your break even is or is not.
Okay, and then Epicor also allows sales categories to flex into the department segment for your income.
Yeah, so the sales category allows us to have a number of different things. It's all user defined, one company might want to see distribution channels. So they could have direct sales and they could have dealer sales. Another organization might want to see where is their product being used and what industries. Could be metal, or it could be medical or government or OEM, automotive, aerospace. So we can build that in, and it's user defined. So it's really available to based on whatever company, whatever information will be meaningful to the organization. This is another aspect of our sales and our cost of sales and the margin calculation. That can happen with standard functionality. We haven't changed any posting rules where upgrades and patches are still going to happen pretty much seamlessly as we're talking about this.
So as Epicor upgrades, or you apply the updates every couple of weeks or once a month, these changes aren't going to change anything because they're part of the standard posting general ledger process. This is not a customization to the software, so any upgrades are not going to affect any of the changes here in the financials. All we're doing is we're just asking the posting engine to post the information more granularly so that we can pull that out for reporting and providing feedback to the users and information. So the sales category can help also, but it goes via the department segment, so you would have your job costing departments as well as your sales categories out there.
And that might be a little bit confusing to some users, but we're using that same general ledger segment of a department for two totally different applications. One of them is the traditional one for department or cost capturing capability, and the other one is to capture our sales category.
But done through the same GL control. So on the sales category maintenance, you set up your sales category and then just link it to that GL control, which goes through the department. Next thing is in the product flexing, where we have this product group. We can have the product group out there, or we have the sales category filled out on the order entry line. So normally it's going to go to the product group. The sales category can also be in there to flex into that segment that we're piggybacking on the department, but we're using that for the cost of sales and revenue side. So the product group is going to pull in the natural or the chart based on the part that's on the sales order. The sales category is going to flex in that department for the cost of sales and revenue side. And Epicor 10, so anybody using version 9, 904 and 905 has this capability as well as the Epicor 10 users. Anyone in Epicor 10, this is when manufacturing variants got added. This also follows the same rules. So we're just making sure that the sales category is filled out on the order entry. That's all that's going to be needed, and you're going to start seeing that your revenue is now broken down by where you want it subcategorized as well.
So on the sales order line, the product group from the part populates the product group on that sales order line. We can make the sales category, if you're using this, can be a drop down that's available to you, to the user, or we can make we can start with a customer master, and we can link that to a customer group. We can link that to a sales category. We can link that to a GL control code. Then that sales category on the sales order line will automatically populate based on that relationship of the customer and the customer group. So we don't have to put in the sales category and product group in certain applications where you have products,
distributors, retailers, and customers, or medical, aerospace.
Yeah, so the sales category can default if you're in an 80-20 situation where 80% of the time the customer is in medical, but sometimes they do a little OEM, the sales category on the right picture here from the sales order line, that can be changed at order entry, but it will default based on the setup.
So this flexing is just going to happen naturally when the posting engine runs and the transactions occur in the system. You can also take this posting system above and beyond. You're not limited to just these accounts or just these structures. You can modify the posting rules. And Ron, I'm going to let you have fun with this one because I don't really touch into it, but I know you've tackled this a few times of having hours captured as a statistic.
Yeah, and the newer versions of the software, we can change on the natural account. We can make that both dollars and a statistic. So now we can go in and change the posting rules to push the statistic in this example of direct labor hours into the general ledger. Now using Excel Connect or a similar tool, I can bring that statistic into a financial report and automatically calculate my cost per hour. Things that get measured get improved. Now I could budget a cost per hour and calculate the variance each month based on Excel Connect reporting as an option.
So this is going to improve your costing and quoting labor rates and rates that you're running on your resources. Okay, posting rule modifications during the posting engine process. We kind of added this in here. We can also have dynamic segments added to the chart of account structure, which Sharon kind of hits your question here, but your question is going to go a little further. So I'm going to go ahead and head into this topic. The dynamic structures in your chart of account can also be added. These, what we were talking about earlier, these are generally mandatory segments that you want the system to post the transaction into or to track. But we can also have dynamic segments which go out and look to the business entity and pull back information and update those segments as well. And we've seen people, not a lot of them, where they'll have the project ID, the customer ID, or the vendor be a segment in the GL. So I want to see my inventory for metals where I got it from ABC Metals. I can then turn around and look at my financials and see all of my inventory that came from that vendor. Just because that vendor was on the transaction from the purchase order through the receiver into AP, because that vendor ID was there, I can have the system automatically pull that vendor and add that into my chart of account structures as well. This is where you can also get into alphanumeric segments in your chart of account. So if I have a vendor ID, that's maybe not going to follow my number format for chart department division, but I want to have the vendor in there as well, or I want the customer. The other one that I've seen people add in is capital expenditures. One thing that I have seen, this allows you to go above and beyond the system. If you want to track like a capital expenditure to an account, but yet you don't necessarily have an individual account set up for each one. Now I can have a global account, but still have that dynamic segment reference the capital expenditure ID. And these dynamic segments can be based on BAQs, where you can pull the values from the business entity transaction. I haven't tried it, but I believe you can have a BPM form pop up asking the person to fill out the capital expenditure value when creating the posting rule. What other dynamic segments have you seen out there, Ron?
The customer is a big one where some companies might have, they could get 80% of their revenue through 10 or 12 customers. So now we can start to track that customer information. Besides by product group, we can also look at it by customer. So we can build a matrix then of what's my profitability and why am I more profitable or less profitable based on the product within the customer from that matrix. It helps us analyze our profitability.
So there's an awful lot more that can be done with the financials. It's just a case of we need to get these into the system, into the structure, so that the system can actually monitor these transactions. Okay. And what does this mean to you guys? How do you use this? And that was another question that someone had thrown out here in the chat, so I'm going to kind of pull that one in here. How easy is it to convert from a COA of 3 segments or more?
We can add dynamic segments at any point in time on a go-forward basis.
So you're not going to lose any information?
Correct.
Okay, then what's the risk in doing this?
Well, it adds more general ledger accounts. That's kind of the downside. The upside, it starts to populate data in the table so that we can grab that information into a financial report.
So your costs, your revenues, you're going to have more granularity in the system. You are going to have more accounts, but there is no downside to adding this. When the posting engine rule runs, it's going to run for all 20-some segments. Whether we use 3 of them or we use 9 of them, doesn't make a difference. It's going to do this. This is just arming the financial team with the ability to provide answers quickly to the different business units without having to dump information to Excel, reclassify it, and then provide info. Flexing warehouses and plants. Do you want to go over that, Ron?
So the first one is in a multi-site environment. We can generate, when we flex the division on the plant or on the site, now I can generate a P&L for that facility that has revenue and cost of sales. And the next one, same idea that we showed earlier in this presentation, is if our sites, if we want to have what I'm calling a poor man's multi-company or multi-site, then we have the ability to define a warehouse as a site or in the system, and then we can get that same granularity of revenue and cost of sales by warehouse. The third one is trucks and inventories. If you're a field service operation, or that's a revenue stream within your business, it might help you to know what revenue and potentially warranty claims, or are we sending a service rep out for customer convenience? So we can start to track this and see what the frequency is of the customer or of the service tech and their activities.
Awesome. And using the sales categories is just putting kind of icing on the cupcake here. It's already in the system for you guys to use, just we generally don't find a lot of people using this, and I don't know if it's a case they didn't know what it was, or it just wasn't a part of, hey, this isn't important during the implementation, we got bigger fish to fry. But this is something you guys can do to break down your categories and track the revenue and where you're selling the most product. distribution channels, who's retail, who's an end user, customers, customer groups. All of these things can be linked to these sales categories. So whether you want to slice it by customer or type of customer or grouping, or just segregate e-commerce from, hey, this was an EDI order, this is e-commerce order, this is regular call into customer service, they place the order manually. This type of information is going to be available there with these sales categories. It's just a case of setting them up and having them tie back to a segment in that account structure. I have another question here from Sharon. Is there a way to capture dynamic segments if a journal entry is done to correct a transaction? Journal out, journal in with a journal entry. You're just going to add the dynamic segment onto the transaction going in. You're going to pull it from the account number that it got posted to. So if a transaction did get in accidentally, it made it through the AP entry or it made it through AR all the way to the GL and didn't get that dynamic segment on there, you can journal entry that out of where it got posted to and put it into the classification where it belongs. And got another question here, Ron. Graham has posted a question here. You mentioned Excel Connect. Are there other tools like dashboards that could report on this, like EDD? Nope. Did you fall for that? Okay. The information is going to go into your TransGLC table. So if you're using EDD, if you're using BAQs, if you're using BAQs with pivot tables, all of this information is available in there. So whether you're using Excel Connect, AFR, the base financial report designer, EDD, or BAQs, any of them have access to all this information. All we're doing is we're having Epicor classify the data more granularly when it does run the posting engine in the transaction. And Graham, just so that you know, you're a presenter. If you click on the very last option in your box for the chat is to post the question into the chat world. We had that question with the panelists earlier this morning. We were trying to figure out how to post a question to a presenter. And Brian Kennedy has a question here. Ron, how can you fix miscellaneous charges on AR invoices?
Well, we can, one way would be to a different discussion point, but we can go in and change the posting rules to get the miscellaneous charge maybe to go by site instead of on the miscellaneous charge, they're using plain vanilla Epicor. It's just one account for each charge. In a multi-site environment, frequently you have similar charges, similar activities going on in multiple sites. So a couple organizations I've worked with, we've gone in and changed the posting rules to have that miscellaneous charge follow the site so that you don't have to set up 30 different miscellaneous charges. You set up 10 and each of the 3 sites can use the same charge. And then behind the scenes, the posting rule changes that. Site.
Yeah, does that answer your question there, Brian? He's hoping to flex the miscellaneous charge by sales category. Is that an option?
Is what?
Flexing the miscellaneous charge by sales category. I think you would have to set up multiple miscellaneous charges and have each one tied to the general ledger control. I don't think the GL control on a miscellaneous charge is going to flex by the sales category. You would just have to set up multiple miscellaneous charges for each one then. And Joe DeWitt has a question here. Can you explain how sales categories can help with understanding sales and also manufacturing variance cost of goods sold?
So sales categories, if we stay with the example of dealer sales and direct sales, the cost of the product is not exact, but it's very similar. So when we have a sales to dealers and sales to direct customers, we could have discounts and allowances based on that that mix of dealer or direct. The cost is going to be relatively the same for the same product. If it takes us down to our margin, then so now when we look at our it's really looking at our margin as opposed to our sales. How am I doing on? Am I more profitable on direct sales or dealer sales? When we could take that a step further and start to push a warranty in there and customer service, if that would be applicable to help you really determine the revenue streams that you have. If there could be 3 or 4, but if 2 primary ones are direct and dealer, then it's really the margin that is going to help indicate what's going on as opposed to the sales level, I believe.
Okay. And Michael, in the invite for the user group meeting is the agenda, and over the lunch hour, I'll go ahead and put up the agenda for the rest of the afternoon. Michael's asking what the schedule is, which topics come at what times for the rest of the day. I'll go ahead and put that up over the break hour too after the next presentation. Is there a way, is the only way to change the cost of sales account to hit warranty expenses to change the product group on the sales order entry?
That's the best way. That's the most straightforward way to do that.
Okay, any other questions out from left field? I know we have until 10:15. We got another 5 minutes. We're ahead of schedule here, Ron. Was there anything else? I think that was the last. Setting up using the categories, and that kind of brings it to a wrap, I believe, on the presentation, and we just kind of hit through the Q&A. If anybody has additional questions, okay, I have another question here. I didn't see Joe's earlier. Sales categories can help with understanding sales and also manufacturing variance costs. Oh, you already hit that one, Ron. Sorry, Joe, forgot to mark your question as answered.
And you've got one from Brian Kennedy just popped up.
Awesome, thanks. This thing keeps resetting to the top after I mark one as answered. Touch base on indirect labor account flexing.
That's a little trickier, indirect labor, but within the GL control on indirect labor, we can capture that again by department. Could be, in our example, a Department 30 or Department 40. Now we have to be careful with when we look at the indirect labor GL control, because half of that transaction is going to trigger a credit to applied labor. So we want to be careful how we handle that, because otherwise you'll end up overstating your applied labor if you're just looking at your applied labor account separately. So we want indirect labor is an area where it's really what does management want to see, and then how can we use standard functionality to accomplish that. Because when you pay your direct labor people, you're gonna debit, welding or machining department for their wages, and then when they work on a job, you're gonna debit work in process and credit applied labor. And if they do that for 6 hours and they have 2 hours of indirect labor, do you really want to show your indirect labor going up to be 8 hours? Or do you want to try and leave that at 6 hours? And that's something that it's different companies have different ideas on that, but that flexing the indirect labor is more than a 2 or 3 minute discussion.
I'll go ahead and get that over to you there, Brian. Any other questions?
Okay.
Okay. Awesome, Fred. Back to you in the studio. Did you want to do a raffle?
Yes, I do. We have our first raffle giveaway. Coda Bears is giving away an Amazon Dot with a clock. And the winner, let's make sure the person is still online, is Kara Bates from WordTech. So congratulations, Kara. I will send you an email and get some information from you so that we can ship that off to you. So yay! You're welcome, Kara. All right, we have about, let me check the agenda here real quick and make sure I don't say
15 minutes or so.
Yeah, I was
At
thinking
11:30 we'll pick up.
At 11:30, Graham Ross will be doing cycle counting. Graham, I'm going to go ahead and set you as the presenter right now, so that if you need to do anything, you can go ahead and get set up.